The popular commodity that everybody hates is silver because it's disappointed people so much, so often. Make no mistake, I'm a precious metals bull. I'm looking not for higher prices, but for sharply higher prices. And I think if the narrative, the anti-precious metals narrative, changes to a positive precious metals narrative, which I think it will, I think that speculators will be surprised by the silver market and more surprised by the strength in silver equities, which have been an investor's graveyard since 2020.
Renowned investor Rick Rule offers insights into the current state of the silver market and the importance of adopting a contrarian approach. Rule acknowledges that silver has often disappointed investors, making it an unpopular commodity. However, he says, "I'm looking for sharply higher prices." In recent trading sessions, silver prices have experienced a decline, falling to around $21. This downward trend coincided with a broader market sell-off on Friday as investors sought safety in the US dollar. The principal drivers behind this slump in precious metals are a strong US dollar and rising US Treasury yields, which exert bearish pressure on these assets. Young-Yu Ma, Chief Investment Officer at BMO Wealth Management, highlighted the temporary nature of the relief stemming from a government shutdown resolution. He emphasized that the focus in financial markets remains on interest rates and the Federal Reserve's hawkish stance, which are expected to drive market dynamics in the coming weeks. Rule also addresses concerns among investors about the government potentially impacting their physical assets, such as gold and silver. He posits that the government can indirectly influence these assets by devaluing currency through inflation or implementing higher taxes and fees. In times of severe crises, governments have historically resorted to measures that can directly affect the ownership and value of gold. A noteworthy example is the United States during the Great Depression in 1933. However, it is important to accurately characterize this historical event as more of a nationalization than a straightforward confiscation. Under the leadership of President Franklin D. Roosevelt, the U.S. government executed Executive Order 6102, which mandated the seizure of all gold bullion and coins held by citizens. This directive effectively compelled individuals to sell their gold holdings, but it was at prices significantly below prevailing market rates. Before diving into Rick Rule's interview with Liberty and Finance, subscribe to our channel and give this video a big thumbs up.
Suspicion is that as consumers become more concerned about fiat currencies and they become more concerned about the structure of the financial world, that gold and silver will increase in attractiveness relative to other asset classes. Will this happen next week or next year? I don't know. But I'll tell you this. When I look at the proliferation of currencies, including cryptocurrencies, I'm increasingly attracted, and I was already attracted, to gold and silver as a partial store of value for my own estate. I mean, the popular commodity that everybody hates right now, and as you know, Dunnigan, I like hated commodities. The popular commodity that everybody hates is silver because it's disappointed people so much, so often. Make no mistake, I'm a precious metals bull. I'm looking not for higher prices, but for sharply higher prices. And I think if the narrative, the anti-precious metals narrative, changes to a positive precious metals narrative, which I think it will, I think that speculators will be surprised by the silver market and more surprised by the strength in silver equities, which have been an investor's graveyard since 2020. I think in both Canada and the U.S. that the fear of an overt grab for private assets is probably overblown. I think even the Trudeau administration experienced fairly severe backlash for their idiotic overreach around the truckers' convoy. People often ask me when I was at Sprott whether I felt that nationalization of precious metals or nationalization of IRAs was a real threat. I've come to understand, I think, that there are easier and cheaper ways for the government to steal your wealth. One would be through the debasement of currency. The other would be through raising taxes and fees. An overt grab for your wealth through your IRA or through your gold might be met by some Americans with an armed response. If the government were to come for your IRA or to come for your gold through the front door, which is to say to nationalize it, there would be an extraordinary political response and an extraordinary threat. If they come through your wealth, if they come for your wealth by quantitative easing, by inflation, by increased tax, by increased regulation, it's extremely popular with the
bread and wash. Oh, you mean what they've already been doing for the past century? Yeah.
Yeah. There's no risk to them. So I think that the risk of backdoor confiscation is much greater than the risk of front door confiscation, although I wouldn't put anything past the big thinkers.
Liquidity often remains a lesser discussed yet critical aspect of investment strategies, particularly concerning precious metals like gold and silver. Renowned investor Rule highlights that these precious metals can function as a form of cash, providing a unique avenue for investors. Moreover, he suggests that specialized investment trusts, such as PSLV for silver and PHYS for gold, offer a convenient and cost-effective means of ownership without the challenges associated with physical possession or high transaction costs. Notably, these precious metal trusts, like PSLV and PHYS, crucially differ from regular bank accounts. While they lack government insurance protection typically associated with traditional banking, they also do not carry the burden of debts or the risk of bankruptcy. This distinction underscores their unique position as investment vehicles offering exposure to precious metals without the complexities of physical ownership.
I can't comment on individual dealers because there's some dealers that are very difficult to bank. You lend against their inventory, they sell the inventory to clients, they take the money and fold up shop, and you as a lender are left holding the bag. That's true in many retail businesses, precious metals dealers notwithstanding. To the extent that reputable precious metals dealers like Miles Franklin experience difficulties with their existing lender, once Battle Bank is up and chartered, I really look forward to competing for that business. Certainly, if we believe that gold and silver held in segregated accounts is great collateral, then we believe that providing selective flooring financing for precious metals dealers is a similarly good business. And we will be on that business like white on rice, Dunnigan. Depends on how you define the banking system. In the first instance, there's no federal deposit guarantee, which is to say that the government won't make good your losses if they occur in PSLV and PHYS. They are instruments that have no countervailing debt against them, which is to say, when you look at it as an entity, these trusts have no debt and therefore don't have the threat of leverage and don't have the threat of a bank run. They are very simple businesses. To the extent that we had a broad-ranging financial catastrophe, where, as an example, the New York Stock Exchange shut down, something which, by the way, I see very small probability of occurring, then certainly while your ownership in the trust would remain intact, your access to liquidity through the sale of the trust units would go away. I would urge your listeners to think about gold and silver as a form of liquidity. And I would urge your listeners, despite the negative real yields around holding U.S. dollar denominated cash, to hold some, whether or not they hold it in the banking system. I'm a big fan of liquidity. I regard gold and silver as good, if volatile, liquidity. And I regard the Sprott physical gold and silver trusts as convenient, low-cost alternatives, as ways of maintaining gold and silver liquidity that don't involve physical possession and don't involve the transactional premiums that often are present in other forms of gold and silver ownership. I don't regard as one as necessarily a substitute for the other. I personally own both physical gold and silver, and I own the Sprott physical trusts.
Following this nationalization, the government subsequently established a new official rate for gold through the Gold Reserve Act of 1934, setting it at a much higher level than the prices at which citizens had been forced to sell their gold. Notably, this adjustment served as compensation for the losses incurred by affected individuals. How can past government actions in response to economic crises inform our understanding of potential future interventions and their implications for investors? Share your thoughts in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.